Today, we are on Sunday, 10th of July. Let us see the markets. Before that, the disclaimer. This information is for educational purpose only. I am not a SEBI registered advisor. Please consult your financial advisor before taking any decisions on buying and selling of stocks or any investment decisions. We are not liable for any gains or losses made by you. The objective of this course is to spread financial literacy. So Nifty has started rebounding from these levels. You can see the marker here at these levels. That was at around 15,400 levels. It moved up to a week before at 15,750 levels. And now it is at 16,000. You can see this first red box, which is nothing but a supply zone. There it means it is facing resistance, and it has come and landed in the zone only. And it is trying to move up. Okay. Similarly, there is a next level. So if you see, if I show you my live chart, this I'm showing you because in case I have a problem with the live chart, here is the live chart, and here you can see the Nifty. So on the live chart, you can see this was the 16,180 level where the resistance is there. And then next level is 16,376. So it has to cross this resistance before it is in a position to move upwards. My thinking is it will move in this level, 16,320 to something like 15,750 levels. It will move in this level for some time. Okay. Because at every level, there is some amount of profit booking which is happening. And we are seeing this as a pattern that after somewhere near 132, so in the morning, the market goes up, it is positive, and then it starts going down because of the profit booking which is happening. Okay. So that profit booking is a very important part which has to be done. And that is what is happening in the market. So this is the previous weeks. I kept it for reference point of view so that you can see that we have moved from 15.6 to 16.1. Okay. Now, some of this is a repetition. Not much has changed. So market is sell on rise. Current levels have improved. 16,220 levels. The resistance upper level is now 16,190 to 16,587. Support at the lower level is at 15,785 to 15,580. So that's a good amount of movement which has happened, positive movement. Okay. It also tells me one thing, that our markets are much stronger compared to the world markets. You'll see how much the world markets have fallen, and we are doing much better. Our range has changed now. We are moving upwards. Okay. Inflation is at its peak in various parts of the world, including India. Demand is reducing. Growth is getting affected. Semiconductor chips situation is easing out. That is why auto is doing well. Supply side logistics issues are still there. So that is not totally resolved. Mild recession is a big possibility in US. There are two schools of thought. Some of them are saying there is a mild recession, and some of them are saying the growth will be less. More or less, it is similar, but it will be not a very prolonged thing. It will be for 1 or 2 quarters. That time we will get affected also. Commodities are down. Oil went below 100 and around 98, 97. And once again, it closed on Friday up to 104. Metals and food staples consumptions are down. Many countries are facing this bankruptcy. When will the markets come to the normalized level? So the inflation is high. We know interest rates are increasing. That is also there. The yellow band is telling me the latest thing. Fed has increased the rate by 75. It is likely, sorry, not increase. It is going to increase the rate by 75 BPS on July 26. And it has also mentioned that in that same announcement that in September, it will be 50 BPS. and then it may reduce it to 25 if it is okay. But the problem is we are having the November election in the US, midterm elections, and there the Fed will like to see that it comes down. So definitely there is going to be tightening further. Liquidity crunching is happening. Okay. Balance sheet reductions are going to happen in US. War situation is still the same. Growth in world economy is getting affected. It is going to be lower. Mild recession is a possibility which is very much there. Crude oil prices are now coming to 105.95 levels. So the range will be between 95 to 105. Citibank has estimated by December it will be around 65. We don't know. And one of the other big fellows have estimated that the crude oil can go up to 325. That was a big figure. Hope it does not happen because world economies will crumble down. A 1 or 2 quarter is a distance we have to look forward so that we can see that there is some recovery. In this period, when we see some movement in our positive stocks, that is the time. If you find some accumulation possible at dips, start doing it, because you may not get the total levels 14,800 immediately. There can be 1 or 2 days when sudden severe jolt will be there for some external reasons, and then the market will fall. But that is not 100% sure. Nobody can. It may happen that we may already touch down the 15,500 levels, but possibility is always there. Buy on dips whenever you get an opportunity, and reduce your satellite portfolio and keep some cash with you, and see that you do better in your core portfolio. Your stocks should be good quality stocks. World economy is slowing down, inflation under control, demand will decrease. So for inflation to be under control, some few quarters are still far away. Okay, then the things will will look better. World disruption is happening. Unfortunately, Mr. Abe was shot dead recently. This results in some kind of political problems across the world. I believe I have read in one of the in the chats, I don't know how far it is true, that some people, some groups in China was celebrating for that. Commodity prices are down. Agri commodities have come down. FMCG is benefiting. Consumption is benefiting. Metals, energy is down. Auto is benefiting. Monsoon has started reviving once again, and it is plus 7-8% just now. So that's a very good indication that we are coming back to the good levels of monsoon. Somewhere the flood situation is very aggressive. So that is another problem. We can see that. The economy should be around 6.5% by December. That is what I see. It cannot be less, but it has to be more. Production. Any question? So this is what I have repeated. The yellow band which is there. I was attending a national education policies webinar, a seminar at Borivali, and I found a lot of opportunities coming in the education sector, and many new avenues are available. So in the next 1 decade, you'll see a lot of changes happening. So that is why I put in the yellow band, which is otherwise the other factors are similar, what we have repeated last time. Okay. Auto is going to do well, and it has started doing. Most of them are coming out with hybrid. Maruti is launching an auto EV vehicle somewhere in July 22nd or something. Rural demand is increasing slowly and steadily. FMCG is doing well. Chemicals is looking better, but they are the pricing, the valuation is very, very high. That is one of the factors which is the reason chemicals cannot go up further high. Pharma, selectively, it is good. Now in pharma, I would suggest one thing. Look at those companies which are having more of domestic demand and not more of US demand. Because US demand companies are facing problems. Sudden change in the regulations, FDA observations is bringing the companies down to their knees. One of the example is Lupin. Okay. So the structural themes are positive for India. So it is looking nice. This is the what is FII position. In last few days, we can see that is on Tuesday, Wednesday, Thursday, Friday, it has started coming down. The selling is coming down. DII is matching the FIIs on a day-to-day basis. You can see that they are positive. This is the monthly score of FIIs in the last, from December 21 till July, about 8 months. They have sold something like, if you add up this, it is around 2.77 lakh crores. And the DIs have matched 2.68 lakh crores. So you can see 2.77 and 2.68 in the same period. This figure is telling you how Nifty has performed, how much it has gone up or down. So will FIIs re-enter in the market? I feel it is possibility which is there. Economy is doing well. PMI index, Purchase Managers Index and Service Sector Index has moved up. That is a positive thing. DIs are matching FIIs on month-to-month basis and on cumulative basis also. Emerging markets, you can see the emerging markets, Nifty 50 has performed better than any of the other markets. Our markets have fallen much, much lesser. There is another view which I am hearing on some of the experts saying, because Nifty 50 has fallen minus 13% only till now, there is a bigger scope for it to fall. I don't think so. That view I don't agree, because it is not that our fall is less, it is our markets are showing resistance and the DIs are able to invest because the money is coming in the SIP basis on a regular basis. Thoda kam hua hai, lekin it is still much better, and that is one of the reasons DIs are able to invest. Okay, so Indian Nifty 50 P has moved to 20. Last time when I talked to you all, it was around 19.5. It has currently moved to 20. VIX has moved better. Now this is one of the indicators why we are doing better. From 25 levels to 21 levels to 19, around 18.39 now. We are seeing that this is a stable market, and when the VIX falls, market moves up. And that is what is also seen, that there is a good amount of stability in the market which is coming up. Now, current value of the Buffett indicator has moved little high from 75 levels. It has moved to 76.18. Still, it is fair values. And the future annual returns, it was 6.5. Since the market has moved up, it has come to 6.1. So, from this is the new ratio which I'm saying, total assets, with including the GDP and the current assets. So 10-year figure is 95.70. We are still little behind by around 20 percentage points, and we are quite up by this. If you want to see the figure here, I kept this ready so that you can have a look. Here is that figure. The site is Guru Focus. You can have a look at it. We are fairly valued, no problem at all. I am taking this new figure. This is the old way, and this is the new method. In the new method, the difference is total assets are considered. Here it is considered only the GDP is considered, okay, with market cap. So if you see, this is 76.18 and 6.1, and here it is showing Indian emerging markets around 5.9, okay, whereas here it is telling me it is 6.1. So around 5.9 to 6.1 is the possibility of the earnings during the current period. Valuations are fair. Definitely FIIs will find things attractive. Okay. And hopefully, if I can see, I think that somewhere we are near the bottom of the FII curve of selling. I believe they have already sold out what they wanted to sell. Little bit of selling will happen depending upon the market situation, some external factors which will have problematic. But just you can see that the ex-PM was killed in Japan, and that day I was looking at the Nikkei. The Nikkei was stable and moving up. So markets are fairly stable. Even the Asian markets, not only Indian markets, Asian markets are also fairly stable. So maybe we have seen the bottoming of the selling part and things can be looking positive. I'm saying maybe it can be bad also because we don't know. We cannot control the external events, and external events are looking rather in a bad shape. Rather than Indian conditions are looking much better than the external events. This is a Nifty 50. It has moved to 19.5720. It has moved little up. Okay. So that is what you can see if you want to see the live charts. Okay. We'll see Nifty 50 first. Here is a Nifty 50. Slightly improving on the valuations. The PE is here with the price. From 19.5 levels, it has moved to 20. The earnings is increasing. That's a very positive sign. You can see here. Every quarter we have started moving up. The PE gets affected when the price is moving up, it will go up. But it can come down if the bottom, the fraction dividend part is EPS. So if we see the EPS increasing, definitely the PE gets low. So you can see here, the EPS is increasing continuously. So as the prices are rising, comparatively, the EPS is increasing. That's a positive sign, meaning the companies, Indian INCs are doing much better. The price to book value also, you can see, it is quite matching and the dividend is also increasing. That's a positive thing you can see here. The red one is increasing continuously. So Nifty is giving a very positive indication that we are moving in a better zone. This is a snapshot of Trade Tiger. I will show you the live one also. If you see this, Nifty is below, down. The blue one. The positive looking sectors are this. Currently, the moderately positive are this. Small caps and mid caps are doing better than the large caps. In the current week, it happened that way. The negative sectors are this. As the capex will start, infra will start moving up, and cement will also start moving up. Sector rotation is happening on a regular basis. Market is range bound, sideways and consolidating. Volatility is high. Sometimes in a day, we are seeing from the positive up movement to the down movement, we are having a difference of about 400 points. India VIX has come down to around 19 points. So that is now, before that, let us see the live charts of the world markets. Here is my Dow Jones index. Went down, stable, little down, once again moving up. Okay, let us see the day chart. This was the day chart. In the weekly chart, if you see, it is showing positive, but a long candle. Okay, the candle ke niche ka week is very long. Here also the week is long. It means there is some amount of fluctuations which are there. S&P 500 index on the weekly, it is showing positive. Volumes also there during the week. Nasdaq, positive candle, green candle. The dollar index is This is one of the reasons why inflation is also going up. The dollar is becoming stronger and stronger. The UK 100 moving, you can see this. A big week is there. Last 2 consecutive weeks. The German market slightly recovering. The French market, once again, a very long week. Volatility is high. The Japanese market, the Hang Seng, the Kospi, Brent oil 107, NYMEX crude oil 104, Bitcoin going down, drastically down below around 20,000 levels. It is holding up. INR USD 79.27, likely to go to 80 very soon. Emerging market index going down. Here is the Nifty 50. Nifty next 50, all are looking similar. Banks have improved a lot. Banks have improved a lot from 32,000 levels. It has moved to 35,000 levels. So slowly and steadily it is moving up. The mid caps moving up. Here is the mid cap once again, mid cap 150 moving up. The small caps moving up. This is the India VX from 25 levels. It came down to 21 levels. And now it is at 18.3 level. PSU banks moved up. Private banks moved up. IT not moving up much. Little bit of movement is there. But still, TCS results was not so positive. In the quarter on quarter, the profits were less. But overall, it is okay. Market may show some negative reaction because some of people will try to book some profits. That is one of the reasons it will. But overall, looking at this kind of market, the results are much good, much better. Metals moving up slightly. I have a different view. I am only going to hold some of the metals, and the others I may start reducing it as I get the opportunity. Because currently we are not very sure about how the government is going to continue with the taxes or not. Okay, there is some kind of situation where the government is controlling a lot many sectors now. So that can become a problem. Okay. Media trying to move up. Energy down. Energy. Just on the last week, it moved up a little bit. Oil and gas, little movement, positive movement. FMCG is doing well. You can see FMCG last 3 consecutive weeks, it has moved up from year to year. That's quite a positive sign. You can see from here, if I take this up to here, there is a improvement of 13 point some percentage, 13.21% from this low to this. So that is a period of, you can see from 20th June till this last 3 weeks, we have improved in this FMCG by this much amount. Auto is moving up from year to year. It has moved up in last 3 weeks. Pharma is little slowly and steadily it is moving up. Okay, but it has fallen a lot from here to this level. Realty has started moving up. I am not very positive on realty, though few selected companies are doing well. Okay, but overall realty as a sector is still a quarter away maybe from the actual growth which you can expect. At this levels of 450 levels, it will take some time to come. Infra, not so much, but it is just moving in this range. But fortunately, last week it moved quite a good. Commodities, much less movement, okay, because it is actually the prices of some of the commodities have gone down. Consumption sector, here you can see there's a big movement which has happened. The movement from this level, if you see, to this level is something like 11.5%. That's quite a big amount. Any particular stocks you want me to have a look? Otherwise, I'll go to the sex.
Yeah, when you say energy, etc., will not do well, what about IEX? What is
See,
the view?
IEX is not dependent on the oil energy point of view. So IEX will improve. IEX has started having competition now. There is a power, another
Yeah, two
company,
companies.
two,
Yeah,
and then Hindustan Power, the third one which has started.
correct.
I was looking at those companies, uska मेरे को data अभी भी इतना नहीं मिला, but IEX is having a market leader position, and they will definitely improve. Let us see IEX. Currently, it is very lowly placed. See, it has started moving, but still a far way to go. Okay. In fact, this week, let us see the week point of view first. The week is showing that it has a positive buying has happened. Okay, the average buying se thoda zyada hai. Now, if you see this bottom one, the green line, and the red one is your Nifty. So it is still above the Nifty. It is coming down very much towards the Nifty, but still above. So I have a strong feeling that we have reached the bottom levels. From here, IEX has to move up. Okay, and if you still see the last year's compared to the last year, we are much ahead on IEX. The growth is there. See here. Last year somewhere we were here. यहाँ से not last year actually, it was last year we were somewhere below that. So थोड़ा very near to that levels, but it will start moving up. It cannot go down further, and IEX is more basically for the power generation point of view and not from basic. So all the coal stocks and all will get affected, but they all are, if you see, Coal India has also started moving little up. NTPC has also started moving upwards. See here, Coal India has also started moving up. So it went down to 180 levels. It is now at 189 levels. Even NTPC has started moving up. All those stocks which are connected to the crude and petroleum, those energy stocks are going down. See, NTPC has also started going up. So I don't think IEX, even Tata Power is down just now, but still it is quite good kind of improvement which has happened. It went down. Okay. Power Grid is also started moving up. PFC is also started moving up. Okay. Any other stock? I was looking at Bajaj Finance. Let us see Bajaj Finance. Okay. Here it is. So this is 31 and 51. The light bluish one is 31 EMA. Green one is 51. So it is below that, but it is about 200 EMA. So that way, if you see compared to the last 1 year, it is up, but about last 1 month and a quarter, it is little down. Okay. But if I were to buy Bajaj Finance, I had bought earlier at higher levels, but now I'm waiting for the lower level around 5,400, 300. But it is coming down to this level. In a jiffy, it comes down and it goes up once over. So it is very difficult to track the stock unless we put a VTC kind of order. See, it came down to 5325 on 14 June, and suddenly once again it has moved up. Still, it is very highly priced. So I am not waiting for the price, right price. Maybe I will miss out, but I don't mind missing out because some of the times I'm seeing when we buy at high valuations, we don't get any gains after that. We end up holding the stock for a longer period of time. Any other stock you're looking? This is HDFC Bank.
RIL.
Reliance is a stock one should hold, but the stock has to go for some kind of restructuring and making into multiple companies. That has to happen because unless that happens, we can see this problem with Reliance. So it is below all the three moving averages. Okay. Not a positive indicator. It has come down to the last year's. Okay. Somewhere in March 22, it was 6 months back. But if you see, this is the low at which it is there. In March also, in May also, and now in this. So this becomes the resistance level. So one bottom, second bottom. From here it will go up. But the situation in the world markets are such that the energy stocks are down. Reliance is going down. The government has put up some kind of excise duties and all. Even if you see this relative strength, the green line of Reliance has now met the Nifty level. So it is now, there is no major change between Reliance and Nifty. They both are at the near about the same levels. I'll just come in a minute. Any other stock you want me to have a look?
No, thanks.
Let's move to the second part. I'll just stop for a few minutes and seconds and we'll come back.